In this video, guys, I want to talk about trading like a sniper. Stay tuned. Hey traders, warm welcome to you. Thanks for joining me. All right, so what I've got in front of me here, I've got DAX, and this is a kind of example I really want to talk about because let me just make sure I'm fitting on the screen so you can see that. Yeah, so this is the DAX. Now listen, there are many traders out there who are on the cusp of breakthrough. They're on the cusp of it. You're spinning your wheels. You're 5 steps forward, 6 back. 7 steps forward, 8 back. 7 forward, 8 back. 7 forward, 7 back. You're this kind of thing. And maybe it's slightly lower sometimes, but it's way better than some traders who are right at the end of the scale who just have, more than likely, it's not straight line down. Sometimes it is, but sometimes it's more massive drawdowns. So, you're doing something right if you have, some spells of good performance, some spells of bad performance. And this might be a fix for you. This might be the fix for you. Okay, so trading like a sniper. I see too many traders, and guys, listen, when I talk about I see too many traders, that's kind of observation. And, I've been through all this myself. I've learned the hard way and spent an awful lot of money learning these lessons. And so, I see it in others as well. And I think, when I see this a common theme, it's something to be shared and something that people can benefit from. So very common is we have a spell in the market that's very, very aligned with your strategy. So I'm going to use a DAX example. I could use the NASDAQ. I could use, a Euro USD, could use anything, but use the DAX, for example. There's not DAX traders out there. So you have a great spell. And the reason I use the DAX, actually, you have a couple of examples for this. You've got a great spell where you have a good run, little consolidation, good run. If you're buying, if you're scalping, if you're day trading, if you're swing trading, you're being rewarded for really doing the same thing again and again and again. Buying dips, buying pullbacks, buying mean reversion to the downside. That type of game has been working well. And there's been volatility. There's been volatility intraday. There's been volatility over a short period of time, like hourly volatility. It's been very nice if you're that type of trader. And so a lot of people make money in these conditions. When we get prolonged conditions that are the same, people dial their strategy. And this is where you're getting into the bucket of, yes, you know what, you're in the professional trader bucket, 1 foot in that, 1 foot out, or consistent trader bucket if you like, 1 foot in it, 1 foot out, and they're kind of in and out, in and out. And so you're aligning yourself with the conditions, you're seeing some success, you're leveraging on it, and then this is what happens, the conditions change. And this is the point. Too many traders then will try to repeat the same thing they've been doing, get frustrated because they're drawing down. This is a great example here on the DAX, guys. Let me just zoom in on here. And like I say, it could be any market. We had this drive up during pen time. We had this drive up, fine, here. This area here was very, very quiet. A very calm before the storm type environment. And a lot of traders drew down from their equity highs during that period because they were pushing and trying to repeat the same thing that worked so well in the 2 months prior. They had monster months, brilliant months, best months of all time, doing really well, feeling great about things. And, things start not to work. And that is always going to happen. The idea is, as a consistent trader, you recognize the conditions and you press when things are working. You dial up the size, more advanced type strategy, you dial up the size, you squeeze as much out as you can. There's not a big flag held up and said, hey, by the way, this is not going to work anymore. You have to decide that for yourself. And it's normally pulling back off equity highs, normally not getting the same moves as you expect, being in tune with things, seeing the volatility, seeing the range, etc., and going, is this a small pause for a day? I mean, you don't know if it's a day pause. Of course, we get little pauses like, this kind of candle here, for example, or is it longer? So you're going to draw down. You're going to feel some pain on your equity curve because you want to push. But the difference between the trader who's kind of been through this a few times and a trader who's just getting that traction, and say no one's better than anyone else, guys, but it's learning, is that trader who's seen this before backs off the throttle, doesn't see it as anything impactful to them as a trader or as their trading identity or their performance. They expect it. You expect to come off equity highs. You never expect to kind of sit at equity highs all the time. You expect that rotation off, and then you kind of get your footing again, and you move back, and maybe stagnate longer than you like. It happens, it's the market, and then you back up again. Maybe a bit of drawdown, find your feet, back up again. And that's the difference. It's recognizing that conditions have changed. And that's another topic altogether, what we're going to do to recognize conditions have changed and all that kind of from an operational perspective. But, the point of this video, guys, is that, don't fall into the trap. Or I recommend not falling into the trap and listen to what I say. And I'm not telling you what to do. And I think there's multiple ways to trade. And I definitely don't have all the answers, guys. But I see this time and time again. So maybe you can do a kind of audit of your own trading and think maybe there's something here. It's when conditions change and you're pressing the same thing that's worked for you time and time again, and you're getting frustrated and you think it's you. You think, oh, I'm doing something wrong, I'm not executing. And you start overanalyzing individual trades. You get your journal out, you start looking at your journal and going, I should have held that trade longer, or I should have got involved. And it's yes, okay, but it's really that the conditions have changed. And the answer is to recognize when the conditions have changed as quick as possible and step back and limit the damage that you're going to do to your equity curve. You're going to do damage. You're going to draw down from the highs if you continue trading, but it's not letting it affect the progress you've made and the confidence you've built, number one. And number two, having the ability to step back, which is why it's trading like a sniper. You are waiting for your opportunity to strike, and then you aren't trading. You aren't firing on the target. If a sniper's there constantly cracking off rounds, he's going to have no rounds left. He's going to blow his cover. Game over. Mission over. The idea of a sniper is that he's waiting for his opportune moment. He's planned the idea. He knows what his opportune moment is. He sees it. Things aren't always perfect. Wind's not right. His cover's not quite right. Whatever. Weather. Whatever. But if it's within his parameters, he takes the shot, does the job, gets out of there. Now, I'm not suggesting trading as a one trade opportunity. If you're a day trader, it's still the same thing. You're looking for your opportunity. Maybe you've got multiple different trades, 10 to 15 trades in a small window. Grab your money, walk out. It's not a case of trading under every environment. And it's the same whether you're swing trading, day trading, whatever. It's recognizing the environment you're in, doing an audit of the environment. If your performance isn't what you'd like and you're finding yourself making money, giving it back, making money, giving it back, just look at the environment you're trading. And if you're switching to different markets, look at different markets you're trading. Are we switching from trending to mean reversion? Are we compressing volatility? Are we expanding volatility? Maybe it's the other way around for you. Maybe you thrive in quiet conditions. That's less likely, but it's possible. Some traders, thrive on that. So something to think about, guys. Think about the sniper mentality. And if you're going through that cycle of kind of feast and famine, feast and famine, feast and famine, rather than looking at each individual trade and saying it's something wrong with me, something wrong with me. Now, listen, it may be something you need to fix. I'm not saying it's not, but something to look at is saying, have the external conditions that I'm involved in changed? Because if they have, then the job doesn't become fixing each individual trade. It becomes being better aware and more aware of when the conditions are changing, and then doing something about it, stepping back, changing strategy potentially, or just stepping back and having a break. That's normally the best thing. You step back and go, hey, I need the market to break out. In the case of this DAX, I need the market to break out this high. Great. We've started to break out. Good rip, good solid intraday move. We're back on. Let's start buying dips. Whatever the situation may be, however you like to trade it. So anyway, guys, something to think out, something to consider. Trading is not black and white. It's a big grey area in the middle. And sometimes the answer lies in that grey area. Take care. Keep your risk managed. I'll see you in the next one. Bye-bye.